Hello, everyone. Good afternoon, and welcome to the CEO Warrior webinar series. I am Caroline Moriarty, Director of Business Development here, along with my other colleagues, Jason Knoll and Kevin Hill. And we have a special webinar today from our newest member of the team, Scott Preston, our accounting warrior guru, just somebody who's out there and teaching people how to keep their books clean and how to build out their chart of accounts in the trades. He is doing some exceptional work here at CEO Warrior, and we want to introduce you to him and to the program that we're offering now called Accounting Warrior.
Thank you, Caroline. So as I said, my name is Scott Preston. I'm the general manager of the newest division of CEO Warrior, Accounting Warrior. And this is going to be a collaborative session. Just real quick on my background. CPA, started out with 5 years at a Big Four public accounting firm, Pricewaterhouse, PwC, some of you may heard of. And since that time, I've worked with entrepreneurs and founders over the past couple of decades, helping them grow and scale their businesses from all the way from the startup stage all the way up to about $120, $150 million. Part of that is I do have a construction and GC background as well. I've raised about $250 million in debt and equity over the years and sold 6 companies for $300 million or so. So this next slide is kind of what we're going to kind of get from this webinar. So really, what is Accounting Warrior and why do you need it? And really kind of the genesis behind that really is clean books are really, it's not a nice to have, it's really a must have. And for those of you that listened last month to the webinar on how to build and scale a business, clean books are really a must. So if you don't have clean books, that could really slow down the sale process while you have the books cleaned up. And then if you were expecting a certain amount of money and as a multiple of earnings and your books aren't clean, you could be in for a surprise if your profit is down significantly. And if you're multiplying that by 5 or 10, $50,000 off could be a lot of money that you're leaving on the table that you thought you were getting. So clean books on that side is definitely a must. We'll also kind of review common mistakes, things we see when we look at other companies' books, and then a special offer at the end of the webinar as well. This was kind of really the genesis behind Accounting Warrior. So a lot of businesses operate in the dark financially. They either have no information, stale information, or the information is incorrect. A lot of our customers, they're like, well, the only time I get to look at my information is when my tax preparer comes in and forces me to kind of gather some information to kind of do the tax return. Of course, then he's asking stuff that happened 6, 8, 9 months ago, and I don't know what that is. Or some customers will be like, I kind of rely on my bank account, but I'm running around like a crazy person. And you know what? My bank account never seems to increase. It always seems to decrease. I have to put money into the business, and I don't know why my cash balance is not increasing. Others will say is, I get numbers, but I don't trust them. Like we've had a customer said, this is the first time, Scott, when you've given me numbers that I actually trust the numbers. Other times they'll be like, I get them months and months late, or I get the numbers and I just don't believe them because I don't trust the people behind them preparing the numbers. And what happens there is a lot of times is you try to run it from your gut, right? And that's not necessarily the best way to run a business because you might be right, your gut might be right, but it might not be right. And so without data, it's really hard to do that. There's lots of places in the business that you can leak profit. It can be because you don't have accurate books. We have a lot of people saying, you know what, I just had to take out a home equity loan and I had to infuse cash in the business. Or I needed to take a QuickBooks loan and that's at like 19% interest. And they're like, I don't know why I'm having to put money into the business. It could be you're not staying on top of your receivables because you're not getting the information if you do have receivables with your customers. It could be that your margins are too low, your overhead's too high, you're leaving money on the table. So there's a multitude of reasons where you can lose profit. And really the key takeaway from this slide is if you don't have reliable data, it's really hard to know where you're losing money and why so that you can go and try to fix it in the future. Good data is kind of a must. And that's Why we started Accounting Warrior. So Accounting Warrior is a professional bookkeeping service, accounting service built exclusively for the home service owners. One thing we do think, which I think is important, is we only focus exclusively on the trades. We don't do real estate. We don't do distribution companies, retail. This is all we do. So this is our sweet spot of providing services. And with what you get here is you get clean financial systems. Everything's going to reconcile. Everything's going to be in the right bucket. You'll get a monthly review meeting with me every month. You'll get a bunch of reporting that's reliable. And you'll just know when you get the numbers that this is a clean set of numbers that you can make good decisions off of. One of the questions that was kind of put in beforehand was, do you do taxes? So no, we are not a tax preparer. You still need your own tax accountant. If you need one, we have some partners that can do that. But one area that you can probably save some money is if your books were in bad shape, your tax preparer was probably charging you extra dollars. And that could have been thousands of extra dollars to kind of clean up the books. Now you won't need to spend that extra money. And actually your tax provider will be pretty happy because now they'll get a nice clean set of books and they can immediately just put that in and crunch out the tax return without spending a lot of extra dollars trying to clean that up. The other one is you'll notice that we have the two logos up here. We have the Accounting Warrior logo and the CEO Warrior logo. And the questions kind of come up, do I need to be a CEO Warrior client to be Accounting Warrior or vice versa? And the answer is no. So you can just be an Accounting Warrior customer and we kind of do your books. You can be a CEO Warrior customer, or you can be both. You do get the benefit if you're an Accounting Warrior customer, and even if you're not a CEO Warrior customer, you get the benefit of the CEO Warrior vendor buying program. So this is a great program. It's like 50 or 60 different vendors, ADP, for payroll, your field service packages, House Call Pro, Service Titan, JobTread, plus a whole bunch of other vendors. You get discounts and rebates by using those vendors, and you get to take advantage of, even if you're not a CEO Warrior customer and you're just an Accounting Warrior customer. So it's kind of a way to help offset, besides maybe having less tax preparing fees and taking advantage of the vendor buying program, you can kind of cut the cost down for the Accounting Warrior program. We're heading into your Q2 budgeting season next week up in New Jersey. We're having a CEO War Planning, which is a 2-day hands-on workshop. And so if you're an Accounting Warrior customer, you also kind of have an advantage here because that plugs right into the war planning. We have a standard chart of accounts, so it's very easy to take your information, plug it right into the CEO Warrior planning to do your budgeting for the rest of the year, and then it makes it easy going in the future to do budget to actuals. So now, but in the past, where either you didn't have any information or the information you have was in a different format, and you're having to spend all this time trying to remap to try to get into the proper buckets. With Accounting Warrior, everything ties nicely into CEO Warrior planning, so it's easy to get your information. And again, we've kind of talked about this a little bit, that you can't plan or forecast. It's really hard to plan or forecast if you don't have data or you don't have reliable data. So that's another advantage with your planning of linking in with CEO Warrior planning. The first thing that we do when we take over a customer's books is we'll do sort of a health check, a financial health check, and we'll kind of look through the balance sheet and income statement, and we'll kind of review things that kind of stick out, that kind of need to be fixed. So a lot of times this is very eye-opening to the customers, because a lot of customers think, oh, my books are in pretty good shape, and then after they get the health check, they're like, well, maybe not. So I'm just going to kind of walk through a sample here of kind of typically things that we find. So this is a balance sheet. So the right-hand side is the original books before we took them over, and the left-hand side is after Accounting Warrior kind of cleaned up and looked at it. So you can see that the cash balance is different because it wasn't reconciled properly. You can see here there's some undeposited funds. What that means is that when you interfaced in with like a House Call Pro, you didn't match up the deposits properly. So it's going to also, you'll see on the next slide, throw sales off. So this really should theoretically be 0 every month. This is a very common one on employee advances, that the actual advance, like I, Scott, want to borrow some money from the company. You give me $1,850. That money gets inappropriately expensed to the P&L as an expense, and it should be an advance. And here you can see that a debit balance where it has parentheses around it. That means that you shouldn't have that because it's miscoded. The advance is on the P&L. It should be here. And the real balance after the payments is $650 is what the employee owes you. We also see things in the fixed asset section. So in here, in the vehicles, this customer happened to have a truck and it had a major repair. They had to rebuild the engine. And so when you rebuild the engine, it extends the life of the asset. So instead of expensing it to the P&L, it should have been put on the balance sheet. So you can see the $6,500 difference. This should have been put on the balance sheet. They also bought a new truck. They put a $5,000 down payment down, but that's all they did. And so you can see they put a $5,000 down payment. They didn't set up the loan and they started to make payments. And so the payments are showing a debit balance on the liability side. So you see after we corrected it, we put the fixed asset on the books. We put the proper loan balance tied right into, if it's Bank of America or GMAC, tied right into the loan balance from the lender. So this is the proper liability that you have on the books. I'm going to kind of stay here with the vehicles real quick. You'll also notice this is kind of very common that usually what happens is 100% of the payments go directly to the liability. So technically, if you borrow money, if your payment's $1,000 a month, $900 might go to pay down your obligation to the bank, and $100 is for interest. So a lot of times what they'll do is they'll just post 100% of the payment. That $1,000 payment would get posted here, and they didn't split it between principal and interest expense. Another common thing we see is payroll mapping is off. So there'll be debit balances sitting on the liability section. So here, ADP, they may have mapped something wrong. This should be 0 and it should be on the income statement. It shouldn't be showing as a debit balance on the liability side. We have a credit card, and in the Capital One credit card, they didn't reconcile the credit card and they had a whole bunch of unposted transactions. So that's why it's a negative balance. It's a debit balance because they posted the payments, but they didn't post any of the expense transactions and they didn't reconcile it to the statement. So instead of a negative 1,750, this should have been a positive 3,900. The last thing I'll talk about here, as we see this quite a bit, is recording of depreciation expense for your assets. A lot of people just don't match it to their tax returns. So here it's very easy to sort of record an adjustment for depreciation expense. And then here we've kind of adjusted to prior year earnings because it was already on the prior year tax return. So that is just the typical things that we see when we take a look as a health check for the balance sheet. So on the P&L side, this company has two divisions. They have an HVAC division and a plumbing division. And you can kind of see right off with revenue that they have a bunch of charges that weren't coded properly, and they're sitting in not specified. You'll also remember from the balance sheet, we had that $7,500 of undeposited funds. And so we came in, and it happens to be that this not specified really belonged to the plumbing division. So it didn't affect the HVAC division, but this $27,000 needed to move over here, also then reduced by the balance sheet. So you can see at the end of the day, our revenue was overstated. It was $222,000. It should have been $214,000. Then the other major things that we see is in the cost of sales. So in the cost of sales, what frequently happens is people don't have their payroll split between direct labor, field personnel, and overhead office personnel. So in this case, this $58,500, that was all sitting up in cost of sales. But that included a receptionist and a dispatcher and maybe an owner. And so really those should be reduced from 58,000 to 50. And then you can see down here, we put in the true overhead payroll. So we split the payroll between cost of sales, so your margin is correct, and overhead. The other things we see is there's no payroll taxes or benefits recorded, and that was all recorded down in overhead. So in that case now, we need to split those up. We need to split those that, okay, for this 50,000 of direct labor, this is the payroll taxes and benefits here, and it was 0. And then this 14,000 drops down to 1,600 because that has moved up. So a lot of times we see that payroll mapping is off, not split properly between cost of sales or overhead. The same with the benefits. The other thing that we see is miscodes a lot. So in this case, in materials, you'll see there's a debit balance. There's a negative balance in subcontractor costs, which is going to be an instant red flag that there's something off. And in this case, in fact, there was a miscode. Some of these subcontractor costs should have been moved over to this was too high, this was too low. So the total's the same, but now we've put them in the proper buckets. And the last thing on the thing is there's some material costs. A lot of times we'll see what QuickBooks has is they have an Ask My Accountant or suspense account. And it's when you don't know what to do, that's your dumping ground. You just kind of put it in there. So we kind of cleaned that out and that went into the materials. And it's a lot of things going on, but if you look at it from the macro level, when you first looked before we got involved, you thought, well, my plumbing division is doing pretty well. It's making a 57% margin, and my HVAC division is actually the one that's not a very good, that's not a margin I'd like. I need that to be up. But in reality, it was flipped. So once we put everything in the proper places, it's actually the plumbing division that's not doing as well, and the HVAC is doing much better. So unfortunately, so if you kind of looked at it, if you had these numbers, you might be focusing your attention on the HVAC division in error when you really needed to be focusing your attention on the plumbing division because that's the one that has the margin issues. You'll also notice that in general, the grand total of the margins between the two is also down. So it's instead of a 50%, 57% margin, it's down to 53. So I know I did a lot of talking there, but you can kind of see this is why it's really important to put everything in its proper place and have everything coded properly because you could have made a wrong decision. You could have focused your attention on the wrong division when it should have been flipped if you had done it from your gut. On the overhead side, I'm going to go through these a little bit. There was some marketing costs that were this Ask My Accountant. There was, here we talked about the payroll. We recorded the payroll overhead with the benefits. This is the repairs and maintenance that we had talked about where they had expensed the $6,500 in the P&L. That's now sitting in fixed assets. They weren't recording any interest expense because all the payments were hitting the liability account. We've recorded the interest expense. This was the employee advance was expensed. So now we've kind of moved that proper. And then here in all other, remember on the balance sheet, we had a whole bunch of unposted charges from the credit card. So it actually, your gross margin was worse, but your actually overhead when all said and done was a little bit better. So the overhead, instead of being 102,000, is only 95,000. So your overhead is actually doing better than you thought. But overall, you're not making as much money because of the gross profit. Instead of making 11%, you're only making 8%. And this is really just one quarter. So if you multiply this by 4 for a full year, that starts to add up. 4% of $1 million is $40,000 that your gross profit is off. And and your net income is off. So that's a lot of money. Again, if you were going to sell your business, you would have thought, oh, you know what? I'm going to get 10 times 25,000. No, you're only going to get 10 times 17,000. So this is very typical for what we see when we kind of review everybody's books. So what do you get at the end of every month? We've kind of gone through this. We've kind of cleaned up your books. What do you get? So the first thing we do is we talked about before, we convert you to a standard chart of accounts, which kind of helps in CEO Warrior planning. We kind of help you clean up the past, and that gives you a good baseline. So now you know I have a good foundation to start from. Then going forward every month, you know that everything's in the proper category, everything reconciles. We reconcile to your bank accounts, your credit cards, your loans, fixed assets. We run your AR aging because frequently, a lot of times we find old AR. They're not have a good cadence to collect your AR. If your company does have AR, you'll get a 30-minute review meeting with me every month. And then you'll get a sort of a standard financial reporting package. And that would typically look like a trending P&L, get like the last 25, 26 every month, the P&L. And at the bottom of that P&L, we'll have key metrics. Labor, direct labor as a percent of revenue, subcontractors as a percent of revenue, materials as a percent of revenue, cost of sales, gross margin, overhead, net income. So you can kind of see on a trending basis, are your costs kind of staying in line, or are you having any peaks and valleys that need to kind of be looked at? You also got a trending balance sheet. So you can kind of see, most people like that for the cash to sort of see how their cash is trending. And then you'll get a snapshot where it might be, if we're in March or April month to date, April year to date. Then you'll get year over year statistics compared to April of 25, year to date April of 25 as well, to kind of compare to that. And then what I really think is the most important thing is you'll have a cash flow statement on the bottom. So in this prior example, we earned $17,000 for the quarter. And then what'll happen is they'll say, well, during the quarter, you had $3,000 you had to pay for your trucks, for your principal payments to the bank. You might have paid off a loan for a couple $1,000, or you might have had to take out a loan for a couple of $1,000. If you have some AR, it would show that if your AR is hurting your working capital or helping. And then at the end of the day, it's going to give you what your cash balance is. So on that snapshot, you have a really good thing of like, this is how much money I made from the income statement, and here's the 4, 5, 6 things that happened on the balance sheet. And now, especially if you work with our master advisors, of Kevin and Jason and Jackie, you have a very clear picture of where your cash is going. And if your cash balance is going down, it's crystal clear where that is happening. So that's kind of, I think the most important part of the package is kind of, because cash is king. Just back here, we had a couple. One is, do we wait to post the information at the end of the month? No, we post it continuously. It's almost on a daily basis. So if you wanted to go in during the month and look at some of your numbers, the activity is going to be current. We don't kind of wait till the 30th of the month and then post everything. The other question that had come up with is, do I have to wait till the monthly call, the 30-minute call, to ask any questions, or can I ask any questions at any time? And you can ask me questions at any time. So during the month, you can email me, text me, call me. So you don't have to wait until our meeting. We'll be talking quite a bit when we first get your business going to kind of make sure everything's in the proper bucket and reviewing it in more detail. But we're here for questions all throughout the month. From a technology perspective, we use QuickBooks Online. Ideally, you integrate in with your field service package, House Call Pro, Service Titan, Field Edge. Also integrate with payroll, ADP, Paylocity, whatever you're kind of using. And don't forget, because you're an Accounting Warrior customer, you're going to get vendor discounts on all these packages that you're using. So that's an added benefit of being an Accounting Warrior customer. If you're not on QuickBooks Online, we can usually port you over. If you're like on Sage, we can kind of port you over to QuickBooks Online. Generally, you stay in control of your software. So you're already paying for ADP, you're already paying for House Call Pro, you're already paying for the various QuickBooks. You continue to pay for those. There is probably going to be a small technology fee that will be kind of added on it that we're going to have for some reporting and for some AI that we're going to use. But basically, you pay for everything on your own. So it's basically, we use a very common tech stack. We can kind of help you convert over to the tech stack if you're not using it. So that shouldn't be an issue. One question that's kind of come up is do you have access to my bank account? So the answer is no. We don't have access to your bank account. You link your bank account in QuickBooks so we can see all the transactions. It downloads all the transactions. It downloads the bank statements. That's all we need to do it. We don't have access to your bank account. And the other question that has come up is, do you do my disbursements, my weekly disbursements? And no, we don't provide that service. You still pay your own bills. We just record the activity as you pay your own bills via credit card or cash, but we don't provide that service. We're having a special limited time offer, so everybody on the webinar and everybody through the month of June, you get a complimentary financial health assessment that kind of goes through where we'll do a deep dive similar to what we showed in the past couple of slides of we'll come back and show you what your balance sheet and income statement areas that need to be looked at for either outright errors or risks or unposted transactions, all those things it's very rare that we get a set of books that is in pristine condition. There's usually something wrong. And some of them are like a shoebox. Everything is wrong. And some of them are in pretty good shape. But generally, they're more towards the shoebox side. So, but that's why, we've provided this service. This typically costs $2,500. And the other benefit I skipped over is you also get a free coaching session with our wonderful master advisors on the CEO Warrior side. So you'll get a call with me. I'll kind of go over and sort of say, hey, here's the things I kind of noticed. Then you might get a call with Kevin or Jackie or Jason, and they could say, you know what, this is what I'm looking at. Your margin's low over here. Let's take a look at we need to look at your price book, or, your subcontractors' percentages of labor really appears out of line. Let's kind of take a look at that. So you get to leverage the CEO Warrior side of the house as well. And if you decide at that point that you don't want to do anything, then you can just walk away. You've got a free assessment with no commitment. If you do, you can kind of sign up and then be a CEO Warrior customer. And then if you want a CEO Accounting Warrior customer, then you can also be a CEO Warrior customer if you find that helpful as well. And then the last thing also is a referral program. So some of the ways we get our customers is through word of mouth of the great job that we do. So if you know a bunch of your fellow tradesmen that, and you refer them, and they sign up as a customer, you get a one-time credit against your bill, and there's no limit on the number of customers. So if you know 5 friends and 5 other friends that are in the same business, they all sign up, you get 5 months free service for that. So it's a nice kind of offer. You can take advantage of that on the website. I think you can request that. That request will come in. It give us a day or so to kind of turn around your request. Then I'll contact you, set up a call, review the financials, and then one of our master advisors will also contact you for them to kind of go through as well for that. Multiple ways to get in touch with me. Accounting Warrior at ceowarrior.com, Preston at ceowarrior.com. Call me, text me anytime. You can also, through the website and everything, sign up for the free financial health check. Any other questions, Caroline or Aubrey, that have kind of popped up?
Can you just tell me something about what's the biggest mistake you see trades owners make when they think a job is profitable, but it's actually not?
They are going off of bad data. So here they thought that this wasn't making very much money, so they're spending all their attention on the HVAC division, and you know what? It should have been flipped. They should have been spending their time on the plumbing side of the house, because that is where that's where the issue was. So what can happen is if you don't have the reliable data, or you think then you're profitable or not profitable, you can run it by your gut, and you could make a less than informed, or maybe make the wrong decision.
Can I add to that answer?
Please.
So I think part of what we see when we're analyzing job costing is pricing inefficiency. So we're not priced correctly in the beginning. So we spend a lot of time making sure we're priced correctly, and then making sure we're efficient on the job. So there's so many things that go into that, but being able to dive into that deeper to, like I said, pricing inefficiencies are the 2 biggest things.
What numbers should every owner be looking at weekly to truly understand job profitability?
We actually have a big 5. So there's 5 things that we want to really focus on, but the 2 largest things that can get away the quickest are labor and materials and equipment. So tracking those I like to track those on a daily basis, but tracking those on a weekly basis is super important. But those are the two highest expenses in your business. I almost guarantee that. And if that's the case, and that'll also get away from you the quickest. So focusing on labor and materials is where you would want to start. The other three are overhead items, which is advertising. Advertising can get out of hand real fast. Overhead wages, so salaries, overhead salaries, and then vehicles. So vehicles as in fuel, maintenance, just some different things that go along with your vehicle. So that's our big five, but the main focus should be labor and materials.
There's another question that kind of goes along with that of how do you accurately factor overhead into your pricing without scaring customers away?
So we have a sold hour and a sold day tool that we utilize. So you capture all of your overhead expenses in there and split it out. So if you have different business units and you have install and you have service, you'd split that overhead out as mix of business, and that overhead percentage would go to that department and determine what your hourly rate and your sold day should be. So capturing all of your overhead accurately, as we would be doing with Accounting Warrior, making sure everything's in the right bucket, and then taking that information, plugging it into the sold hour tool, making sure it's captured into your pricing of that way. So that's the best way to do it. The other way you can do it is you can take your overhead percentage of revenue, determine what you want profitability wise, and then I'll tell you what your gross margin needs to be on every job. So for example, if your overhead's 40% and you want a 20% net profit, you need to have a 60% gross profit. I mean, that's the easiest way to do it, but the best way to do it is to plug it into a tool and capture that into that calculation.
Jason, if someone's books are messy right now, or for Scott, where should they start first?
Chart of accounts.
I would say get a free health assessment. So if they're messy, I think get a free health assessment. We can kind of take a look at it, and like I said, then kind of convert them on the standard chart of accounts. But if you got a messy set of books and you're like, I don't know where to start, let's start with the free financial health assessment, and then we at least know where you stand, and then we can have a plan to kind of get everything corrected.
Yeah, and the reason Accounting Warrior was born in the first place was because as advisors, as we had new members come in, their books were not in great shape, and we didn't have a way to really get those dialed in without them going back to their current accountant. I want to reiterate that this is accounting for the trades. This isn't just a bookkeeper. This is accounting specifically for the trades. So as we look at financials and try to help customize a business plan for each company, we have to have everything accurate in cost of goods and gross margin, and then in overhead expenses. Otherwise, we don't know what action to take. In Scott's example earlier, there were some things things in the wrong places, so we could have taken the wrong action steps. So making sure everything's in the right place. We constantly see it. Field labor's in the wrong place. We see it almost every time a new client starts in. So to Scott's point, the best thing would be to just get access to your QuickBooks, take a good look, and do an analysis that way. And then organize your chart of accounts.
And what would happen is Jason, is if you want us to take a look for the free health assessment, we would give you our kind of firm ID. You would kind of set us up in QuickBooks. Then we kind of click in. We get access to your QuickBooks. Then we would come back with a report and set up a call after we have the results.
How do you know if your pricing is wrong versus your team's execution being the issue?
That takes a minute. Getting your books corrected in the first place. So that's where we would start. So if we look at we dive into your cost of goods, we're going to look at material as a percentage of revenue. We're going to look at labor as a percentage of revenue, and then all the other cost of goods too. And then that kind of gives us an idea of where to focus. So if it's a labor problem, it's either we're not priced correctly or we're inefficient. If it's a material problem, we're not priced correctly. So then you would dive a little deeper. If it's a labor issue, we would dive much deeper into your team members in the field, figure out labor percentages by technician, and then kind of dial it in from there. So chances are that if you're having labor issues, it's probably mispricing or some kind of warranty recalls, something like that, or just not planning correctly and not having material on their trucks. Like I can go on and on and on. So that's not an easy answer other than we have to have your books correct. Then we can start an action plan and dive in and be able to capture that information.
You can see why leveraging CEO Warrior is, a nice synergy between the two of, we kind of get you the numbers so that you can make great decisions. So that's why I'd encourage you to take advantage of this free assessment, because I'll take a look at the books and give you some things, and then you have our master advisors that can come in and help you take it to the next step, next level.
Kate, do you want to give them some information if they want to have one of these assessments done and what they would need to do?
Yes, absolutely. So I added in the chat. Hi, I'm Kate. I work at Accounting Warrior with Scott Preston, and in partnership with CEO Warrior. I put in the chat the 2 links if you would like to meet with Scott Preston and I to discuss what bookkeeping looks like, how we can help your business, how best to go about a health assessment like Scott discussed. That is the first link. And then if you would like to meet with Caroline to just discuss on how to best grow your business, whether it's through training, coaching, systems implementations, working with people like Kevin, Jason, and Jackie who are on this call and have been in your shoes, have gone through everything you're doing to grow, that is the second link that I put in the chat.
Do they need to bring anything with them to this initial call with you for Accounting Warrior?
For booking and showing up to that meeting, no, just bring yourself.
If somebody made one change to their books right now, if they fix their job costing and pricing, what do you think is the biggest impact that they would see immediately or over the next 90 days?
Profitability,
and profitability, and that means cash, right? You see the cash in the bank account kind of go up. So you should see, when you have the data and you start working with it, you can also measure, right? So you can kind of say, hey, listen, working with us, we were able to increase your margins by 3 or 4%, or increase your revenue by 4 or 5%. So you'll see tangible results, profitability, and right in your cash account.
Well, thank you, everyone. And if you do have questions, like Kate mentioned, those links are in the chat bar. You can either book a call with Kate or myself. You can certainly head over to our website for additional information at ceowarrior.com, where all of this is posted as well. Thank you for participating in our webinar series, and we'll look forward to seeing you next month when Podium will be featured on our series. Thank you.
Thank you.